The Bloomberg terminal scandal has sparked a larger debate about client privacy. Roger Kay is a technology analyst who started his career working with one of the first electronic trading systems. He joins us now from Newton, Massachusetts. Thanks for joining us.
Hi, Anand.
Let me ask you first, what exactly are Bloomberg's reporters accused of here? Did they break the law?
Well, did they break the law? They might have broken some agreements that they have with customers. I'm not sure that they broke the law. Some of this stuff is pretty undefined. For example, if you have system data that tells you when customers log on and log off, that can be considered sort of maintenance information. And it's the kind of thing that a company that ran a system like Bloomberg would like to know. It turns out that that information might also be valuable to reporters, and in fact they were using it, and it appears that they were encouraged to use it by their management. But it's not probably illegal unless there was a contract that said they're not supposed to do that, and I'm not sure that there is.
And are reporters also, do they also have to observe the compliance rules that traders have to?
They are not as strictly, they are not as restricted as the traders are. Traders have a higher standard they have to live under. There are journalistic ethics, there's various things that journalists have to do, but their legal constraints aren't as difficult as traders have to face.
Okay, Roger, let's look at it from the other side. I mean, don't traders, banks, government departments, these organizations that we've mentioned, these organizations that use Bloomberg, don't they know that they're basically subcontracting their information to be transmitted to an outside company?
Well, they should know that. They should know that, and they probably have come to ignore it just like everyone else does. Most people don't realize that whatever you put up on the internet pretty much stays up there, and it always has, right from the very beginning. And so, well, if it's up there, somebody can get it down. I mean, for example, supposing you have an encrypted service that you send things to, and your data's going in nice and encrypted up to them, and then they do some chores for you and get some information for you and send it back through an encrypted link. Well, that sounds pretty good, except they're the ones who are operating the encrypted link, and if they decide to just uncork your thing, they can do that. Now, they may be legally constrained from doing that, and they shouldn't be doing that, but it doesn't mean that, for example, individuals working for them might just do it because it's to their personal advantage or just because they want to. So people have to realize that information is out there, and you can't just pretend that it's just floating off into the ether and disappearing. It's actually being retained, and it can be retrieved by somebody else.
Yeah, because I'm just wondering, how different is this from, say, people who use Gmail, Google's email service, or Yahoo? We all have accounts on these email services. How different is that? Because we know, for instance, that these things are tracked. I mean, that's how Google puts its advertising in it. It sees what people are talking about.
Right. And, well, the interesting thing about it, there's some information theory that talks about how you can take lots and lots of really dirty data. In other words, data which doesn't really tell you very much. Let's just say logons by some trader and what time of day he logged on or whatever it was. It might not be very interesting by itself as a single piece of data, but if you have millions of them, you can begin to derive patterns. It's a little bit like when you walk by a picket fence. You can actually see what's behind the fence. It's like, yes, there's a fence there, but the little holes as you're walking by begin to show you kind of what's on the other side of the fence. So there's data analysis techniques that allow you to take data which is pretty imperfect by itself, and because you have lots of it, you can derive very interesting information. And in the financial world, people really want that information because they can trade, they can use it to trade and beat their competitors, get there ahead of the pack, and make some money, which is a pretty good motivation.
Right, now Bloomberg is in sort of damage control mode right now, full-scale damage control mode, it seems.
Right.
Has this done any serious damage to the company, and how does it fix the problem, if indeed it can be fixed?
Well, right. So the problem probably can be fixed, at least in the short term, by simply telling the customers that the reporters have been forbidden to use this stuff and that they've turned it off at the systems level. The traders have to believe that Bloomberg is actually doing that. And there's no reason to think that they wouldn't. That if Bloomberg says, yes, we didn't realize that was a problem, but now we're going to fix that, and definitely no one's going to do that anymore. That assurance is probably good enough over time. But I think what this does is it shakes the faith of traders and other people in the sanctity of their information. And so at some point, they begin to wonder, well, really, we've been trusting these systems for years, and we haven't even thought about whether anybody's looking behind the curtain to see what we're doing. And now we have to sort of wonder, and it's not just about Bloomberg, but about all these other services, as you described. You know, do we need to be concerned about this? And the answer is yes. I would say you should always assume that whatever you're saying is essentially public, and simply just say it as if the whole world were listening. And in that case, you won't be surprised when it turns out that they are.
Good advice, Roger. Roger Kay, they're talking to us from Newton, Massachusetts. Thanks a lot.